I was an institutional bond trader. For those of you who don't know, I traded bonds on Wall Street for a good amount of time. This is where I got started 20 years ago. I prefer to invest my time, energy, and money in the private markets versus the public markets, especially right now. Hey, quick disclaimer. This is not investment advice. This is for information and entertainment purposes only. I am not a financial advisor. All investments incur risk. Don't forget that. This is all my opinion from the mind of Nicole Purvy. Do your own research. So, last week I went on a podcast. I had a grand old time. Shout out to Keith and them at Memes and Markets. I hope you listened to it. It was really, really, really good. They got a lot of views. And y'all in the comments, y'all showed your girl some love. I appreciate every one of the comments. I comment on all the comments, okay? Showed your girl some love because we was talking about some stuff. But you know how the human brain works. I got to focus on the one negative comment that I got. Somebody said she didn't really answer any of the questions. Something like that. Like as if I just avoided answering questions. I feel like I answered the questions very, very well. But when I thought about it, I said, they may be talking about the fact that I didn't really give any specific investing picks. I'm assuming that they're used to people going on the show. Again, shout out to Keith and Ben. They're used to people going on the show giving specific investing picks, and I didn't. You already know on this channel, I don't particularly like to do that unless you're on the newsletter. When I get a little stock pick here and there, I share it with you. But the reality is, the broad reality is, the only pick I have for y'all is our private equity fund. Invest with us, okay? That's the only thing that I'm going to wholeheartedly recommend. But the reason that the other reason that I don't do it, now I'm about to bust y'all heads wide open. None of this is fact. This is just Nicoleology. Okay? Nicoleology. It's Nicole. It is actually a Nicole-theism. A Nicole-theism.
Okay.
Okay.
Let's hear this Nicole-theism.
All right. So this Nicole-theism, this is how I've always looked at investing, even when I was an institutional bond trader. For those of you who don't know, I traded bonds on Wall Street for a good amount of time. This is where I got started 20 years ago. I prefer to invest my time, energy, and money in the private markets versus the public markets, especially right now. Now, am I saying that you can't make money in the public markets? I'm not saying that. What I am saying is it is way easier to make money in the private markets versus public markets. Now, for the purpose of this conversation, when we talk about private markets, we are not only talking about private equity way that most people understand it, right? Like VC funds, like a private equity fund like I have. When I talk about the private markets, I'm talking about small private owned businesses, medium private owned business, even large private owned businesses, privately held companies, or business ventures, and or private equity. Anything that is not publicly traded.
And like private credit too, right?
Private credit.
Yeah.
That's a whole nother conversation. We don't even got time to talk about that because this is a whole entire private credit war going on right now. But we're not going to talk about it. I'm sorry, maybe we'll talk about it next week. Let me know in the comments if you want to talk about that next week. But I want to talk about investing in private markets versus investing in public markets. This is my argument for why anybody who got 2 brain cells right now who is investing should be really paying attention to investing in private markets versus public markets. Okay? So the very first reason, this is like the simplest reason. Did you know that it is legal to trade on private insider information in private markets versus public markets?
I did not know that.
Now, you can't do anything unethical. Let's be very, very clear. But you can trade on private information. Now, here's the thing that no one's...
Are you saying insider information?
Insider information.
Okay.
Yeah, sorry. Here's the thing that most people don't know is that the elites, even though it's illegal to trade on insider information in public markets, they still trade on insider information on public markets. So this is one of the things that I don't like, especially as we're seeing it right now with the Jeffrey Epstein situation and the Epsteinians. Right? I'll call anybody in the Jeffrey Epstein files, they're Epsteinians. We're now learning that they have been moving on insider information on publicly traded companies for a long time. You and I both knew this.
Yeah.
That is the real disadvantage, is that everyday people cannot trade on insider information on public markets, but large corporations and the wealthy and the elites can. That's the real disadvantage when you're investing in public markets. It's not that you can't trade on insider information. It's that some people can and some people can't.
Right.
I don't like that. In private markets, private equity, and you can move on insider information. The second reason that I like to invest in private markets versus public markets, now this is not going to apply to everyone, is in order to capitalize on trading on or investing in private markets, you have an advantage if you have a good understanding of business. Most people don't. And this is why they invest in public markets, because it's like, hey, it's other people that understand business better than me. And so I'm going to invest in their business.
Right.
Now, unfortunately, most of those people who you think understand business more than you, one, don't. Two, are completely morally corrupted, which I'm going to talk about that in a minute, because your morals and your ethics is a huge component into how that goes into how good of a business person you are. And I'm not just saying this because I want to be like kumbaya. Morals, like your ability to follow instinct and read human nature for good, always will lead to you having a good business.
I heard a guy say, and I'm not sure if you saw it, but I heard a guy on a podcast say he doesn't do any business dealings or go into business with any men around him that he sees cheat
on their wife.
Cheat on their wife.
Right.
Yeah.
I have so much to say about that, but that conversation will go left. I truly believe, I had this conversation with a good friend of mine. If you watch the podcast Tank, I truly believe how you do one thing is how you do everything.
Right.
And that's just an offshoot of the idea in the Ten Commandments when God says, I am your one and only God. You will serve no other than me. He's basically saying all is one. How you do one thing is how you do everything. If you are going to be unethical to the person that you decide that you're going to become one with, get this, I'm about to really trip you out on a scriptural level. One, when the Sadducees and the Pharisees tried to trip Jesus up, they said, hey, what's the most important of the law? He said the first one is love your neighbor, or love God with your heart, all your might, your heart, right. Second one is love your neighbor as yourself. If when you get married, you become one with someone, you treat that person, your flesh is your flesh, her flesh, your flesh is her flesh. Like you got the same flesh. Y'all are one person. If you don't like that person, or if you disrespect that person, you're also disrespecting yourself. So if the best you can do is love someone as though you love yourself, if you don't love yourself, you can never love me.
Right.
Bars.
Yeah.
Bars on bars on bars. One of the reasons why Jesus was spitting hot fire flames when he gave those two scriptures, because the part that people forget about, we always think about the fact that, hey, he's saying love your neighbor as yourself, but you have to start with loving yourself. And most people don't. And so it's really two, I don't want to say commandments, but it's two laws in one. You have to love yourself.
Yeah, it's a layered commandment.
Which is a whole nother conversation. I could break that down in the scriptures as well. But it's layered. So you got to love yourself and then love your neighbor as you love yourself. If you don't love yourself, you can't even do the second. You can't even love your neighbor. Nor can you do right by this business. Okay? Now, to go even more in depth, why I don't give random stock picks is because we have a newsletter where I break down structurally interesting things that really move the market. I give you my frameworks for how I think specifically about business, because you need to understand business to understand this stuff. Also, too, y'all know I have partners for our private equity fund, and they contribute to the newsletter too. They know their stuff with apartment investing. Noelle Parnell and Arthur Lyons, my partners for our fund. Get on the newsletter. The link will be down below. It is 100% free. So it's easier for you to invest in other business, especially privately, because you can now look under the hood of the business because you understand business. So you have an advantage. Whereas if you're looking at publicly traded companies, you can only look at the publicly available information to determine whether that company is of good health. And a lot of the things that really determine whether the company is of good health is not things that's going to be public. For example, this is one of many things, the character of the CEO or the people in leadership. There are a lot of people in leadership that are the face of publicly traded companies. I can see, even though their stock price is up, I can see there is no soul in there. Not an ounce. Soul gone.
Deep.
Gone.
That's deep.
There is a look I can see. I'll see it in people when it's like, I can see it. It's a look in your eyes. I wish I was comfortable enough to share some of these people, but y'all know the look.
They know the look.
They know, you know the look. And so when I'm investing privately in companies, running my own company, y'all know we have a fund, I can use all of that. In addition to the fact that I actually, like, y'all think this is my gift. My gift is really running business. Like, I know my stuff when it comes to running a business. This is just a little side thing that I can understand financial markets and break it down.
Right.
But that's really the whole idea behind investing in companies. You're investing in this publicly available information. You're supposed to understand business and how to run a business. But again, a lot of the components are things that's not going to be public. So if you understand running a business and you can look at a privately held company and look under the hood, go spend a day with them. Have a couple of sessions, meetings. Really go to lunch, go to dinner, talk to accounts payable, talk to the logistics department. You can't do that with a publicly traded company. Okay?
Yeah.
So that's the next reason. That's actually probably my biggest reason as to whether I feel like I have more control over the outcome of my investment. I feel like I have more control over the valuation, and I feel like I can see things a lot better. The next reason that investing privately to me is better than investing publicly is because when you invest publicly, you're investing based on price, not always valuation.
Based on price and not valuation.
Yes. And there are so many things that have nothing to do with the value of the company that influence price. Like algorithms, like the emotional temperament of the public, like a tweet.
That's why a lot of stocks can go undervalued for a long time.
Or overvalued.
Or overvalued.
For a long time.
And this has nothing to do with that, but one stock in particular that I've watched for a very long time that has a very is PayPal. A lot of people don't even, and you can do some research on it, but PayPal is a very profitable company, but so undervalued just based upon what you said, the price point.
So here's the other thing too. I just saw something where Stripe is thinking about acquiring PayPal. I think it's Stripe acquiring PayPal, not the other way around. I just news that I just saw come across my desk in the last 24 hours.
Yeah, PayPal has like never had. I'm not gonna say never, but over the last, we could say last 15, maybe 15 to 20 years, as far as profitability with their earnings and their quarterly earnings call,
They never had a
they
bad year.
probably had a total of 3 bad ones, misses, and they weren't even that far off. But it's been green straight across the board.
That's crazy. I know
But
everybody's like the PayPal mafia, that PayPal mafia. We're not gonna talk about the PayPal mafia, y'all, right now.
but just saying that to say like it's not based off valuation; it's based off price stuff.
It's based off price.
And
I don't
price
like
can
that.
be manipulated.
It could be manipulated. I don't like that.
And you
I'm
saying
not putting
that-
my wealth in the hands of possibility and probability. I know a lot of people. I mean, that goes back to the gambling thing, right? Like we're full on gambling. That is what you do. You put your wealth, your net worth, in the hands of probability and possibility.
So are you saying it's safer to do private equity or invest in private equity?
Let me be very, very clear. I don't like to use the word safe.
Okay.
There's a couple words that you have to be very mindful about using when you are in finance. If you're going to have a career in finance, a couple words that you have to be mindful of using: safe, guarantee. Those words I would take it out of my vocabulary.
Okay.
It may have a lower risk, but even that is relative, right? So you may say it's less risky, but not safe or safer, because nothing is 100% safe.
Okay, that's true.
You can lose your money on one of my favorite things I like to quote to point out to this is some years ago, not quote, but like a story. Some years ago during the pandemic, I was on live. Now, y'all keep in mind, I am from finance. I was working on a trading desk when the 2008, when Lehman collapsed, okay? I was working that day. It was intense, all right? And I wasn't like that was my first day. Like, I'm not young, y'all. So who would have thought Lehman, like, that was just never something that was just even on our minds. That's my whole point that I'm making. So my mind is shaped a little bit differently. So one day during the pandemic, I was on a live with a real estate investor, and some kind of way we got on the topic of burring, and this investor said, the way I burr, I'll never lose money. And I was like, anytime you purchase a property. Now, what I'm about to say to y'all right now sounds like, yeah, that makes sense. And because we live in different times, but I'm pretty sure no one agreed with me at the time. But I was like, you can't not never lose money. Anytime you purchase a property, you are making a bet that interest rates will be this in 9 months, like when you go to refinance. The price will be this. You are making a bet that certain market conditions line up, and there's always a possibility that some of that will be changed. That is the fact that we had this conversation. It turned, the conversation was so ugly, or maybe on my part, maybe she didn't care, but I hung up like I'm never gonna talk to her again.
Yeah.
I was so mad at the lack of wisdom. I'm sorry, boo. If you didn't harbor this, just know that that's how petty I am. I was gonna say that's how stupid I am. I don't talk like that to myself.
Yeah.
That's how petty I am. That I'll be like, my mom was visiting yesterday, and she told me that I don't suffer fools well. Something like a saying. It's like when you be stupid, I be mad. Like I be taking offense. Like, why am I offended? But anyways, like, why am I offended at you? I don't suffer fools kindly. That was the statement she said. And I said, nah, that's not my issue. That I don't suffer fools kindly. I just, I feel like when I point out the flaw in your thought process, sometimes these people try to gaslight me. And don't try, that is when I get mad. Like, what are you talking about?
Yeah.
So went all the way left just to come back to say, like, nothing is safe because anything can happen. Any Lehman could kill it. Who would have thought?
Yeah.
Who would have thunk? Nobody. And I think they weren't, when I was a trader, they weren't one of my investors, but I probably was knocking on their door. I'm pretty 90% sure I was a sales trader. So I was trying to get them to buy my assets that I was trading. I was trading commercial paper, medium term notes, and I was doing currency swaps at the time, and maybe some other asset. I can't even remember. I traded a lot of things when I was a trader throughout the career, but I'm fairly certain that I was knocking on their door like, hey, want to do a trade with me? Want to do a trade with me? Do a trade with me? And we would have never known that they was going to collapse. So be mindful when you use that word safe, reverse it and talk about risk, less risky, more risky, less risky. And even then it's relative,
Okay.
right? So just be mindful. Never use the word guarantee. If you're in business, unless you have like a money back guarantee, that's something that you are willing to honor. But like, I don't care what kind of product, don't say this is guaranteed to work, especially if you are raising money, if you are raising private capital. Don't just get that word, that phrase out of your vocabulary. Okay. During the pandemic, when a lot of people was raising money and they was, being scammers. So like all these people were coming out trying to raise money for their investment, a lot of real estate, but they didn't come from finance. I literally heard them say guarantee. I heard them say this word, and I'm like, that's the benefit of coming from finance and understanding that real estate is a financial asset class. Like a lot of these real estate investors got in and didn't see it that way. You just saw real estate in a silo. But anyways, my whole point that I'm making, safe. Don't use that word. Less risky.
Okay.
If that's what you're saying.
Okay.
So your question is private markets less risky? Right. I wouldn't even say that. I'm gonna bring this full circle, especially for those of y'all who have been watching the show. It is less volatile. It is not less risky.
You should change your first name to Volatility.
No, I should change my first. No, legally change my name to Volatility.
Legally, yeah.
So it's Nicole Volatility. Nicole Private Markets Volatility. Okay? It is less volatile because one, you don't have this constant pricing, daily instant pricing. Every moment it's being repriced. Okay? It's almost like I was thinking of this analogy. When you're investing in single families, right? The valuation of the property is based on the valuation of the other properties similar to it, comps. Okay? That's almost like public trading. When you invest in apartment buildings, the valuation is based on the rents, not necessarily the valuation of the other properties. Yes, that you use that to determine the cap rate. You'll look at other properties in the area to determine the cap rate, but the price is typically, after factoring in the cap rate, you got to come to some agreement, but a bigger factor that influences it is the rents. So it's more valued based on the value versus, there was an investor some years ago. If y'all know who I'm talking about, mind your business. Just put his initials in the chat. Okay? We not going to talk trash on nobody on this channel, okay? Because I ain't going to war with nobody. Not for y'all. Okay? There was an investor who had this whole investing scheme, and by scheme I don't mean in a negative way, strategy. And all of it was revolving around identifying these desolate areas, buying a property in the area, rehabbing it. I think they may have sold maybe initial sold it to themselves or sold it to a friend or somebody. They were trying to set the comp so that all the other properties, they're setting the comp. Right? So they're trying to control the value.
I got you.
But it all fall apart because there is no real demand.
It's a created demand.
Right.
Yeah.
You're not even creating a demand. You think you're setting the comps. And that's sometimes, that's how I look at public markets. Now, I don't want y'all to be like, oh, Nicole's not going to ever be looking at stock. Now I'll be buying stock. Don't get it twisted. But I prefer, and we can talk about stock. Like, I don't mind. I think it's a safer bet, especially for those who watch this channel. If you watch this channel, you're intellectual. Study business. You know more than a lot of these people that's getting up on CNBC, MS, whatever the financial channels are, right? And then just talking about technicals. You know more just by knowing more about business.
Yeah, study business and read your book.
Right. That is really my true love. Study business and read my book, The Anti-Hustle. Get a copy. And you just have so much more control. I know I sound like a control freak because I probably am, but I'd rather not leave my wealth in the hands of somebody else. And we're seeing that the somebody else's are so incompetent that they will go and hire a PDF and perform rituals because they're that incompetent. And these are the people that you're leaving your wealth to through public markets.
Yeah.
That's how incompetent they are.
I would say you making that up if I didn't read it myself on the U.S. Justice Department website.
Thank you. The other reason why I like to invest in private markets versus public markets, I'm always going to bet on the private markets because with the leadership, there is an alignment of incentives. Typically, when you invest in public markets, the CEOs get paid no matter what. Stock tanks, they get paid. They commit a crime, they get paid. That woman that got ousted as a lawyer because of she's an Epsteinian, she still got a big fat check. Y'all hear about golden parachutes? When you invest in private markets, typically the structure goes that there is an alignment. The leadership, they make money when things go well.
They're incentivized.
They're incentivized. They're more incentivized. I like that.
I like that too.
Another reason, tax optimization. With real estate, you can do 1031 exchanges. You're deferring the tax if you make a sale, you have capital gains, you identify another property within a certain time frame that you're going to take that money and invest in. You don't have to pay that capital gains tax right away. Okay. When you invest in a fund or a syndication like ours, depending on how it's structured, you can share in the depreciation with the LPs. So you can tax benefits from that. So there are more tax optimization strategies when you're investing privately. One last thing, too, I want to address the elephant in the room. With private markets, there is a big negative, which is illiquidity. Now, I don't mind illiquidity, except for real estate, single families, when the market moves away from you. I don't want to talk about that. Last couple properties I'm getting beat up on because it's illiquid. But because of the illiquidity, there is usually a huge premium for it. So I want you to think about I think we may have talked about this. A colleague of mine has a business, doesn't want to do the business anymore, wanted to sell it. Did we talk about this last week? Well, they didn't say they just want to close the doors down to the business. I feel like we did, but that's okay. Maybe we didn't. Okay. Colleague of mine has a business, doesn't want to do this business anymore. They're doing millions. And they don't want to do it anymore. And I'm like, hey, you should sell it. And I don't know what the reason is for why they don't want to sell it, but I could guess that sometimes it takes a long time to sell a business. A deal could take a whole year. Y'all negotiating, depending on what y'all negotiate, they may say, hey, we want you to stay on for 2 years.
Right.
Like, it could be a nice little minute. Also, too, you're selling the business, it's harder to find people that want to buy a business like your business all those things. The same thing if you own a private shares of a private equity fund, depending on the private equity fund, it could be difficult if you want to sell your shares to someone else, right? But you got to be okay with this, right? Typically, because of the illiquidity, there's a premium on the returns. So, for instance, our fund, we give a 20% IRR. That is a target for our fund. That's really high because there is an illiquidity premium.
Right.
Also because we can do it because we're so good at what we do. But we have to pay you a premium for investing in us. Yeah, your money's going to be locked up for 5 to 7 years. But you want to trust that to the stock market right now?
Right.
Some people may say yes, but okay, go ahead, have fun. While you want to poop your pants every 3 days.
Yeah.
Like for real.
Because it's very volatile.
Because it's very volatile right now. Even when it's not volatile, you're not getting a 20% IRR. So we have to pay a premium. And it's the same thing. This is another reason why I like running small businesses. I'd rather put my money and attention into running a small business or buying or owning a share of a small business because the returns are much better.
Yeah. 20%,
I
don't know where you're getting 20% at.
Right.
In a lot of places.
That part. Now, what are they trying to do about the illiquidity premium? We had a whole Brandon and I had a whole conversation. Your wheels must be turning because you had a bunch of things you wanted to talk about. I'm going to do the layup for you. When we talk about illiquidity, talk about, you did a little chat search.
Right.
And your chat search, talk about the part where, or just recite back the part where it talks about how the wealthy use private markets to grow their assets and they use public markets to gamble with their play money.
So essentially right now it says public markets are crowded, over-financialized, policy sensitive. Public markets are good for liquidity, cash instantly, short-term opportunities, volatilities, which equal paydays, price discovery, where you can see fear and greed in real time. Now, it also says, all right. Now, it also says what's really happening right now under the radar is public markets equal liquidity plus narrative, while private markets equals infrastructure plus ownership. But tokenization is about to bridge the two. Private assets are being fractionalized, digitized, and brought on chain, which is what we spoke about
a long time ago. Real world assets. We did an episode about real world assets. So here's the thing, though. We got to be really, really mindful. When we start talking about introducing liquidity using tokenization, that liquidity can change some of the benefits of private markets, right? Right now we're in the gray area with the Clarity Act. Depending on what is a security versus what isn't a security, that can determine whether you can trade on public or private information or not. There's so many things that I have not done a deep, and I'm waiting for them to just come out with it, because following that war is not going to benefit me like what they're fighting over about in the Clarity Act. I do know that what is a security and how it is treated in reference to it being a security, I know that's a major, major thing, right? Because like Ripple is not a security. That was a big win for them, right? I'm sure Bitcoin is a security. It's going to be treated as a security.
I don't think Bitcoin is a security yet.
It's not a security yet. I don't know. Y'all let us know in the comment. I trust you though. But if we wrong, y'all correct us. But that's probably a huge, it can't go on that Bitcoin is not a security. That can't go on. They have to do something about that. Yeah. So hold your horses, right? Depending on how they treat the tokenization of real world assets in order to introduce liquidity, how are they going to determine what is a security and what is not a security? And how are they going to determine what information we can use to act. I'm not there. This is not, I'm just letting you know that when the tokenization does happen, it will affect things. Also, too, we will lose the benefit of the fact that it's more value driven versus price driven. Right? Because remember what they did to prop up GameStop during the pandemic. That's not the real value of the company. They just was all hyped because.
So I have a question about what you're saying though, because when we use the word, I'm gonna ask you, when you use the word security, right?
You ask me a question, I'm gonna need to Google to make sure I won't misspeak.
But this is how my brain works when I think of a security, and you know, they could correct me if I'm wrong or correct, you know. But as far as Bitcoin, I don't think it's a security, but one is decentralized. It's not centralized. It's a decentralized currency still, which essentially means they have no control over it. Like, and so when I think of a security, I think of something that they have a level of control over. For the simple fact that when they did that with the GameStop, essentially that happened because whoever was hedging against it essentially lost control of it.
Mm-hmm.
So, what makes something a security is what I'm asking.
Something I need to Google. I need to make sure. I actually used to have this definition memorized, but it's okay.
Someone needs to Google.
Because I know I don't want to mess up. So a security is an asset, public or private, but it's governed by the SEC. That's really that's the real most important answer. When it's governed by the SEC, you got a lot of rules and regulations behind what you can do.
Okay, so essentially, what answering that question of like there is a certain level of control that needs to be had, a governing.
Yeah. So right now, like when people, for me, this is just me personally. When we talk about Bitcoin is decentralized and all the things that we talked about how dope it was back when it had to surge in 2017, none of that matters no more. It don't matter. Is it decentralized?
Still.
What does that even mean? It means that no one entity can control it? They back there controlling it right now. I posted a chart on my stories that showed the pie chart, passage of time of the types of entities that own Bitcoin going all the way back to '08. And it was almost entirely individuals, and then introduced governments and introduced institutions, corporations, and then in the last year or so, especially with the introduction, now that, last year they made it so that you can trade it in ETFs, right? The amount of people that own it as individuals is like so much smaller than what it was before. And so now with these big whales, they're essentially controlling it. They're controlling the price.
And then it also says, as of early 2026, the U.S. state's government is the largest known stakeholder of Bitcoin, with over
so the U.S. government
and 28,000 Bitcoin keyword seized from criminal organizations.
So the U.S. government done stole the most Bitcoin. Okay, so they're the largest holder of Bitcoin right now. And you telling me that it's decentralized?
Quote unquote.
Okay. So that statement don't mean nothing to me. Like, I get that it's technically decentralized.
Right.
I get it. But that don't mean nothing to me. We're watching in real time how they just a few people just control the market. Okay.
But that essentially ties back to what you said earlier about price and valuation. Would you say? Because if they're controlling it, they can do whatever.
Right.
They can do whatever they want with the price.
Right. And so that's why I personally, I think certain things do need to be tokenized, but I don't want private markets to be tokenized. I do think single family should be. Absolutely. It already moves like a publicly traded asset anyway.
Yeah.
So like it needs to be tokenized, one, to eliminate, and I don't know if it's separate, right? The deeds need to be tokenized. And the ownership, I don't know if that's separate. Maybe it's the same thing, but deeds absolutely, because deed fraud is a huge problem. I don't know if it's like earth-shattering problem, but it's a huge problem that can easily be solved just by tokenizing and putting properties. Every city should put their property on a blockchain. That was when blockchain technology first came out. My thought was, oh, y'all gonna put real estate on the blockchain? That's the best solution. That's the main solution for it. And then y'all doing dumb stuff, and they putting monkeys on the blockchain, selling monkey paintings. I just read an article. Right, I just saw an article where it's like Madonna paid $800,000 for this monkey. Now it's worth $2.
They selling CDs
$2. Right. Worth nothing now.
Yeah.
Y'all was putting Roblox outfits, skins, in Roblox on the blockchain. Y'all should be putting properties on the blockchain in Roblox. Y'all should be doing that in real life. Meanwhile, grandma's getting her house stole from her. Right up under her nose. She go to pay her taxes, or she go to, I don't know. I don't want to talk about that because there's a whole thing out there with mechanics liens, and they just out there doing all type of wild stuff. So anyways, I'm just not a huge fan. I don't think that real world is not going to benefit me, I should say. Putting real world assets on the blockchain because it's introducing a level of transparency that was always a benefit, or the lack of public transparency was always a benefit in private markets. Like, I don't need everybody in the business of this thing that I'm doing. Oh, I want to look under the hood, but like, if you want to look under the hood, you go look under the hood. Not log in on your computer.
So they just trying to bridge the two and bring.
And I get the benefit of it.
Liquidity to privatization.
I get the benefit of it. I'm just saying, my own personal vote is no. So, with that being said, in the newsletter, I do share when I get stock tips. I'll share them. I'm not going to tell you that I'm endorsing anything. I'll share them and I'll share why. Like I just did a newsletter the other day and I shared a tip. In our private investment community, the Profit Door, I always share specific individual strategies. But I just told you why I prefer private markets versus public markets. And that's why I don't specifically go all in on a particular just random assets. Other than like what I do share with y'all. But the real reason why I don't want to ever get into that, the real biggest reason is because I want to teach you to think. I want to teach you to think for yourselves. I want to help empower you and just help you remember that you are smarter than these people getting up here talking heads and just talking. I see stupid. Jamie Dimon just the other day said, I see some people doing stupid things, something like that. Right? And I want to be like, I see him too. And this man, this is supposed to be the smartest of the smartest, and these people is making dumb decisions. Again, I want to keep going back to this. You understand way more than these people. These people understood so little that they were willing to do the worst of the worst because they didn't understand their jobs. Don't forget that. That should be it is very sad, but it should be empowering. Because these people are running whole economies in the world. And they understand their job. They're so incompetent that they were willing to do the worst of the worst. That's how incompetent they were. And meanwhile, you second guessing yourself. And you know more than these people. So stop second guessing yourself. Put down the Robin Hood. I'm not, again, go ahead, do your thing, right? But like sometimes put down the Robin Hood. 10 of your friends got businesses. Run through it. Pick one. Invest in one. Or if your friends got trash businesses, don't do it. Hey, Jimmy, instead of coming over drinking tonight, bring your P&L statement. I got a couple dollars. Maybe you don't invest with your friends. Maybe it's Jimmy's little brother. Jimmy, tell your brother come over here. I know he got the widget business. Tell him to bring his P&L statement and all his accounts receivable docs. I want to see what you got going on. You know this stuff. Stop second questioning yourself. All right, y'all. Remember, train, don't chase.
I don't have your chat, and if you ask me like, what are those 8 topics that chat said? So.
Oh, do you want me to share with you?
Yeah.
I wrote the ones that I want to talk about up here.
I don't know if you planned on doing that though or not. I'm just saying.
If I plan on doing what?
Being like, Brandon, hey, what did chat say about those?
No, I'm not going. Oh, the ones that you pulled up, or the one that I pulled up?
The one you pulled up, the one we did in the car.
We're not going to tell people we had a conversation with Chat about this.
Okay.
Because really, honestly, I spit all this shit off, and then Chat just,
yeah.
I did. Okay, we're not giving Chat no credit. Okay, it just articulated, just pulled out a couple of things that I said. It probably was listening to me like, this bitch smart. Let me tell her what she just said. Okay. Let me tell her what you just said. First of all, I'm going to get some points. And two, I didn't know none of this.
Let me come on my questions. Let me see something.
All right.
So okay, I'm going to say the word safer and you correct me how you did.
However you want to do it. I'm just about to go.
Because that was valuable information when you said what you said as far as when you said, it's like in finance, there's terms you just don't use, right? Like, I think that's...
Okay.